Today, our group will present about financial ratio analysis of Borneo Oil Berhad. First of all, I will explain the vision and mission of the company. Borneo Oil Berhad vision is to creating long-term value in service of a wealthy, productive and homogeneous future, while the mission of the company is to produce superior products and services that set us apart from the competition. Secondly, to always be the chosen business partner and to produce win-win situations. Thirdly, to generate long-term growth and returns for our stockholders. Fourthly, to become the preferred employer. And lastly, being a responsible corporate citizen who works in harmony with nature and the communities in which operate.
Now we will start with the first ratio, which is liquidity ratio. In liquidity ratio, the first ratio is current ratio. To find the current ratio, we have to divide the company current asset with the company current liability. For Borneo Oil Berhad, its current ratio is higher in year 2021 with 5.98 times compared to year 2020, which is 3.21 times. Based on the result, it shows that the company is good in paying their current liability and able to meet its short-term obligation. Next, we will move to quick ratio. To calculate quick ratio, we have to subtract the current asset with inventory and prepaid expenses. Then we have to divide with the current liability. For Borneo Oil Berhad quick ratio, the quick ratio is good in year 2021 compared to year 2020. In year 2021, the ratio is 3.72, which is higher than year 2020, which is 2.29 times. Based on the ratio, it shows that the company is able to meet its short-term obligations without relying on their inventory. For liquidity ratio is net working capital. Net working capital is analyzed to measure the company overall liquidity. To calculate the net working capital, we have to subtract the current asset with the current liability. For Borneo Oil, net working capital shows that the company has good net working capital in year 2021 with RM94,232,610 ringgit, which higher than year 2020, which is RM50,667,090 ringgit. The company has positive net working capital, and it means that the company has the potential to grow and make investment.
Next, I will explain how to calculate and interpret the activity ratio. There is three ratio under activity ratio, which is inventory turnover, average collection period, and total asset turnover. Now, I will explain how to calculate inventory turnover. The formula for inventory turnover is cost of goods sold divided by inventory. For 2021, the amount cost of goods sold is RM40,351,665, and the amount of inventory is RM42,807,368. After we divide them, we will get the answer, which is 0.95 times. For 2020, the amount of cost of goods sold is RM59,699,906, and the amount of inventory is RM21,208,522. After the calculation, we will get 2.81 times as the answer. Borneo Oil Berhad does not fare well in the year 2021 when comparing to the previous year. This might happen because the company is not able to generate its sales and having overstocking problems. Other than that, I will explain how to calculate average collection period. The formula is account receivables divided by sales and multiplied by 360 days. In the year 2021, the amount of account receivable is RM33,732,801 and the amount of sale is RM51,408,700. After the calculation, we will get 263 days as the answer. In the year 2020, the amount of account receivable is RM40,121,435 and the amount of sale is RM88,289,028. After calculation, we will get 163 days as answer. After comparison, it shows that the average collection period in the year 2021 has increased from 160 days to 263 days. It shows that the company is receiving the slow payment from its customer. Not only that, the company also having difficulties in collecting them. Following that, I will explain how to calculate total asset turnover. The formula is sales divided by total asset. For 2021, the amount of sale is RM51,408,700 and the amount of total asset is 823,291,561. After we divide them, we will get 0.06 times. For 2020, the amount of sale is RM88,289,028. The amount of the total asset is 729,487,021. After we divide them, we will get 0.12 times as the answer. According to the comparison, total asset turnover in the year 2021 has a lower ratio, which is 0.06 times compared to 0.12 times in the year 2020. It shows that the company need to boost its sales or sale of certain assets in order to pay the company obligations.
Hi and Assalamualaikum. My name is SITI SYAUQINA NAJWA Binti Muhammad ZAMRY. In this slide, we will discuss about financial ratio of leverage ratio. What is leverage ratio? Leverage ratio is a measure the level of borrowing in the firm. In short, the leverage ratio is the proportion of debt that a bank has to finance its asset compared to its equity. The debt ratio in the company provides insight on the proportion of total asset financed by the firm's creditors. Based on the calculation above, a lower ratio in 2021, 6.78% compared to the previous year ratio, which is 7.91%. This indicates Borneo Oil is performing well and likely to be a more independent business. This signifies that a low debt ratio has greater worthiness and is considered preferable in terms of risk. The debt to equity ratio are used to calculate the weight of total debt and financial liability against shareholder equity. This will create a lower amount of debt financing via lenders versus equity funding via shareholder. This firm implies a more financially stable in business because it shows a decline in ratio from 2020 5.18% to 2021 4.81%. Next is the time interest earned. It is used to measure the number of times the firm's ability to cover its interest charges out of its operating profit. A higher time interest ratio 32.33 times in the year of 2020 compared to the year of 2021. 4.61 times is favorable because it indicates that the company possesses a less risk, which means this is a good sign to investors and creditors in terms of solvency because the company has the ability to pay its debt obligation. Organization that has interest earn ratio that is higher than the previous year is considered to have enough income to cover its interest expenses. The company gross profit margin shows a decrease from 32.38% in 2020 to 21.51% in the current year. Basically, the gross profit margin shows the percentage of each sale remaining after the firm has paid for its goods. Thus, a lower ratio compared to the previous year is poor performance and may imply that the company is underpricing. The low profit margin suggests a limited of safety, which increases the possibility that a drop in revenue from 2020 will resulting a net loss for 2021.
Next, net profit margin. The formula for net profit margin is net profit after tax divided by sales and multiplied by 100. For 2021, the amount of net profit after tax is Rm28,484,070. The amount of sales is Rm51,408,700. After calculation, the answer is 55.41%. For 2020, the amount of net profit after tax is 1,597,700 ringgit, and the amount of sale is Rm88,289,028. After calculation, the answer is 1.81%. Based on the analysis, the company net profit margin is 55.41%, higher than the previous year, which is 1.81%. It shows that the company is able to maintain its efficiency in turning revenue into actual profit in the year 2021.
Last profitability ratio is return on asset. To calculate return on asset, we have to divide net profit with total asset and times with 100. For Borneo Oil Berhad, return on asset, the company has good ratio with 3.46% in 2021, which higher than 2020 with 0.22%. The company will obtain 0.0346 cent for every 1 ringgit from total asset in year 2021. For liquidity ratio, our ratio in year 2021 is higher than ratio in year 2020. Based on our ratio, it means that the Borneo Oil Berhad has good liquidity ratio, which enable the company to pay and meet their short-term obligation without difficulty. The company also have a positive net working capital, which can lead the company to grow and invest more in the next year.
To conclude all the three activity ratio, all three activity ratios are lower than the ratio in the year 2020. Borneo Oil Berhad must minimize its overstocking inventories in order to solve this situation. This is to ensure that the firm is selling things swiftly and that there is a high demand for the products. The organization should then make a concerted attempt to collect the money from the consumer in order to keep the average collection period ratio below than 2020. Aside from that, Borneo Oil Berhad should increase income, enhance inventory management, and increase efficiency to increase asset turnover.
To conclude, all leverage ratios are performing well. Thus, Borneo Oil Berhad will have a strong sign of a business that can meet its financial obligation whether in short term or long term. A lower financial ratio indicates that the company has a stability with a consistent revenue stream. Hence, in order to pose a minimal risk, this company should maintain their performance in the coming years.
For profitability ratio, we can conclude that gross profit margin in year 2021 is lower than year 2020. It shows that the company is not efficient in controlling the cost of goods sold. For return on asset and net profit margin, the company show a good ratio, which means that Borneo Oil Berhad performing well in generating revenue, profit, and cash flow.